What's driving markets? Welcome to Market Take. Each week, we'll bring you our insights on the latest market and economic trends that are impacting investments. I'm your host, Wei Li, Global Chief Investment Strategist at BlackRock. We continue to like Japanese equities, even at all-time high, for three reasons. The first is around valuation. This may be surprising, but on an equity risk premium basis, given the low rate environment that is still in place in Japan, actually valuation does not look too stretched in Japan. Not to mention, a large part of the initial rally was also boosted by weaker currency, and in dollar terms, actually, Japan has done well, but not that well. So there's more to go. And the second reason is corporate reform. This is not a new term in Japan. More than 10 years ago, we're already talking about 3 R's and Abenomics, but it has always been slow moving. It's starting to accelerate. If you think about the Tokyo Stock Exchange focus on cash management, you look at return on equities, it's increased now from previously 0 back in 2010 to now 9% right now, which is really quite exciting. It's still half the level in the US, but corporate reforms, can really help bridge that gap. And the third reason is around earnings. In the same way in the US equity market, we're seeing rate repricing, hawkish repricing, but earnings are offsetting that, in fact, more than offsetting that. The same is happening in Japan. You look at operating profit in Japan in the latest earnings season, it's grown 17% year on year, and that is also recognizing that expectations have been revised higher. So for these three reasons, we continue to like Japan, even as it has reached its all-time high. And the last time it was at these levels, this all-time high level was back in 1989. So it has taken a long time, and we do think that momentum can continue for now. For more details, read our weekly market commentary. Go to www.blackrock.com/weekly-commentary. Thank you for tuning in. If you have enjoyed this episode, subscribe to Market Take wherever you get your podcast.
This material is intended for informational purposes only and does not constitute investment advice, a recommendation, or an offer or solicitation to purchase or sell any securities, funds, or strategies to any person in any jurisdiction in which an offer, solicitation, purchase, or sale would be unlawful under the securities laws of such jurisdiction. The opinions expressed are as of the date of publication and are subject to change without notice. Reliance upon information in this material is at the sole discretion of the listener. Investing involves risks. BlackRock does and may seek to do business with companies covered in this podcast. As a result, listeners should be aware that the firm may have a conflict of interest that could affect the objectivity of this podcast. For more information, visit blackrock.com.